Well, what a great market we have. A market that teaches you exactly and beautifully what you need to know. There's a difference between being an analyst and being a trader. The difference is that you do the analysis, and trading is different from your analysis depending on what happens in the market, depending on the market's movements, and you need to completely separate your trading from your analysis by considering the right timing for entering a trade. So what happened? If you watched my video from 2 days ago, I pointed out this zone, the zone between $4,470 and $4,500. If you watch my video from 2 days ago, you'll see I highlighted exactly this zone. I took this zone into consideration as a zone from which the market could reverse in yesterday's video after seeing this candle. If you remember, I had taken a sell position and my stop was set just behind this sell. So what happened in the market? What happened was that the market came and hit my stop. Now imagine if I hadn't set a stop for myself, what could have happened? It could have been disastrous for my account. If I hadn't set a stop for my trade, well, the market would have gone up here, reaching as high as 4,500. Hoping that the market would turn around, I would have lost a significant portion of my assets, maybe up to 10%. I would have lost my assets, and most likely after that, I would have started thinking about getting revenge on the market. I would have entered and exited here, closed and opened positions, and it could have happened. Up to this point, I would have lost all my assets down to $4,500. What happened? The setup was triggered and I waited for the market to reach this $4,500 level. Here, I didn't catch the market with a sell order because first of all, it was the middle of the night and I was asleep. And secondly, even if I had been awake, I couldn't have gotten any confirmation here. Based on what I saw in the market, I only had that $4,500 left. There was nothing else. Except for one thing, if we look at the daily time frame on this chart, not on the 4 MetaTrader brokers, because the chart you see on your broker is different from the one you see on TradingView, and this is one of the problems that TradingView creates for us. If you use MetaTrader, these daily candles, this one and the next 2 that have closed and opened, are exactly aligned. If you look at the chart on MetaTrader, it's completely different, as is your broker's chart, and well, this shows that exactly on the daily time frame. We started the drop right from here, from this trading node we had here, and this breaker block or this BB that we had here. Today when I woke up, well, yesterday my trade stop was hit with a very small loss and I didn't trade anymore. Today, exactly at 9:30 in the morning, I always check the market at 9:30 a.m. Dubai time. You know, the reason is that based on my experience, I feel that most of the time market reversals happen around that time. So today at 9:30 in the morning, I opened the market and here it is. Well, based on the confirmation I had from $4,500 and according to the monthly candle and the daily candle that had closed, it had closed right on our breaker block. At 9:30 in the morning, I decided to open this trade. The trade is exactly for 9:30 a.m., even if I can here. Let me show you my executions as well. Yeah, look, I executed the action right here at this very moment. I sold on the market exactly here. I executed right here. I sold on the market, and what happened here? Now, there were some scalping trades here that gave me some very small profits, but here was the main trade that I opened, exactly here. And what happened? The market started to drop, and here, after seeing this confirmation, I entered the market again with the same volume. And now what I expect from the market, what is it? What I expect from the market, the primary advantage is that the market consistently gives me lower prices and I can confidently keep this particular trade open. I strategically keep one of these trades for the immediate short term and the other for the much longer term. For one of these, I set the take profit here. For this trade, I set the take profit. I set it at the 50% Fibonacci level, and the other one I set because I see that in the market we're at a very, very high price. Here on the daily chart, when it eventually comes back, it's not particularly likely to easily give us a significant new high anymore. And for the foreseeable future, I am expecting the overall market to drop quite considerably. I wish you all good health, even if some people might not like it. But for now, gold looks bearish to me. I can even give you lower price targets. For example, we could even see 2,750, 3,750, or 3,000. And we could even see 3,500 for this market, because there's nothing standing in the way of this market anymore. This is my analysis, but once again, I don't trade solely based on my analysis. I take my own risk tolerance into account and move along with the market trend. Wish you success.